What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD, where I've just been able to close this pretty epic 4-hour trade. It's based on a 1-hour fair value gap being filled and then a retracement back into the range. I've closed at the top of the fair value gap here, but we do have buy side above us, which I do think will get ran. But I was a little bit conservative on my take profit and happy with 4R. Let's jump into the high time frame analysis now and see what led to this entry. As always, we're going to start off our analysis on the 15-minute time frame. We're going to be using the session liquidity tracker indicator for TradingView to show us untapped levels of session liquidity. So these are these extended green lines here. Links to all of the indicators that I use are posted in the description below. So if you want to set your charts up to look similar to mine, head on down there for details. We can see that we've had a very large day on Friday. So a large pump up, consolidation in the New York PM session, and then we've opened with a huge new week opening gap. When we see these new week opening gaps, I always expect these to get filled. So at the moment we're at the bottom of the new week opening gap. Asia has tried to fill it and then rejected from a previous weekly opening gap. And we're currently heading lower. We've got the Asia low just down below us, and I am noting that we've got this large 15-minute fair value gap at this point. You can see that we do have a smaller 15-minute fair value gap just above this one as well. So what this led me to do was to jump up to the 1 hour. And I'm going to highlight a 1 hour fair value gap here. And this is actually a balanced price range because we can see we have a bearish displacement from New York on Friday and then a bullish displacement going back up. Where these two overlap is our balanced price range area, so a really sensitive area. Also at this level, we can see if we pull our fib from high to low, this falls within the optimal trade entry. So 618, our grey line here is optimal trade entry as well. So the optimal trade is falling within the balanced price range. So we're building up some confidence to think that we may get a reaction at this point if we come lower. And obviously as a bullish target, we have the new week opening gap, which I'm thinking will get filled. If we pull down this low, we will be sweeping the current Asia low, so this extended green line as well. You can see current price action is bearish. We are leaving bearish fair value gaps coming down. So this is why it's giving me the idea to pay attention to this area here, see how price reacts around this area with the expectation that we may get a reaction to come and fill the new week opening gap. So that was the bias for this morning. We'll drop onto the lower time frame now. So I'm going to go onto the 5-minute just to start skipping through. It's worth noting that there is no red news on the calendar today, so we've just got clean price action at the moment. So we'll start skipping forward now. We're paying close attention. So obviously we've taken this, which was the Asia low, prior to the London session opening. I'm not looking for an entry at this point. We're at the bottom of the new week opening gap. Wanting to see a sweep of liquidity before I start looking for an entry. And we can see my fair value gap indicator has actually disappeared again. Let's just swap it over. We'll use a slightly different fair value gap indicator. So we're leaving bearish fair value gaps here as we are coming for this level of liquidity here. So this is where I'm going to start getting interested. This will also take us into a discount of Friday's range. So we've swept liquidity. At this point, I'm going to drop onto the 1-minute time frame. So we can see prices aggressively dropping away from that level of liquidity. So we've swept it, but we are displacing lower, so we're not pulling back into the range. So again, I'm now looking at this 1 hour fair value gap, specifically optimal trade entry, just to see what kind of reaction we'll get around this level. And we're paying close attention to the timings. So we're coming up to 3 AM at the moment. So we'll see if we get anything at 3. Had a pullback, respected that fair value gap. So there's nothing here yet. So we've had a big displacement down. We are coming back up. I'm not going to try longing any of this. We've not had a break of structure. We're not leaving any breaker blocks. There's nothing to tell me that I should be looking for a long at this point. So this is the 3 AM open now. So we have left the bullish fair value gap, but you're literally trading straight into bearish fair value gaps here. So that's not enough confidence for me to be taking a trade. I'm going to be looking for several PD arrays to line up before I take an entry. Also, you can see we've not hit 50% of this fair value gap yet as well, so I want to come down at least to the 50% level. So fortunately, we weren't looking for longs here. Price has come and taken this low. Well, it's created relative equal lows at the moment and then displaced through it. So still strong bearish price action. 315, so the new 15-minute opening. No entry at this 15-minute candle, so we're still displacing lower. So we have had a break of structure here and here. We're not leaving much displacement and we're in the middle of a 15-minute candle. So again, I'm not looking at taking an entry at this point. Left order blocks here and we've closed over a bearish fair value gap. This long run here though, we've still got plenty of resistance. So price is coming down. We're coming to the new half-hour candle. We are displacing lower. So at this point, I was really interested to see what's going to happen at 4. I want to have a look at how the 1-hour candle closes in relation to this 1-hour fair value gap. If the hourly candle closes inside this area, then potentially we could look for a long. You can see here we've come down, we've not quite tapped optimal trade entry as well. So we've not quite hit the 618, and so there is room to come a little bit lower. So I'm looking for a confluence now between the hourly open and an entry. Respecting a bearish fair value gap, strong displacement lower, swept that low again. So again, no entry going long at this point for me, not enough confluence. We're in the middle as far as timing goes. The half-hour candle's opened. So 3:30 and we're displacing lower. So I'm really looking for something around 4 AM now. We'll come to the bottom of the fair value gap. So we've whipped through the fair value gap and this is where now we're coming up to 4 AM. So I'm looking for some confirmation here of an entry. So we're going to try and build confluences. So what we've got at this point, which is what got me interested, is we have broken structure. You can see this aggressive move down. I like to see an aggressive move down and an aggressive buyback. So we've had a break of structure. We've left here a volume imbalance. We've closed over this bullish candle. So this last bullish candle led to a high, which led to a new low. This is our breaker block. So we've got a volume imbalance inside a breaker block. And we're coming up to the start of the 4 AM candle, pulling back into the fair value gap. So we're filling the fair value gap and then pulling back into it. We're pulling back in. So at this point is where I was looking to set a potential entry. 359. So it's coming up to that. So I was thinking this is going to get tapped at the start of the brand new hour and then continue high. We've got a lot of inefficiency here. We've had a break of structure. Which is one confluence. We've got volume imbalance, which is 2 confluences. We've got a breaker block, which is 3 confluences, and we have an order block, which is this candle here. OB, all in this area. and high to low, top of the breaker block is pretty much optimal trade entry into this volume imbalance. So this is what I mean when I'm stacking up confluences before I'm taking a trade. I'm looking for all of the reasons to go long, and there's lots of reasons to go long at this point. We're closing the candle back into the bottom of a fair value gap after we've filled it. Big inefficiency here, so I'm thinking that we can at least take the buy side liquidity from this run. So we're going to open a new candle. We're going to have to pull back on the new hourly candle. In my opinion, it's very unusual if the 1 hour just continues lower. So we should get a pullback, targeting this buy side liquidity. For our entry, we've left a breaker block, we've left an order block, and we've got this volume imbalance in here. I'll mark it as an FVG because they're more or less the same thing for the entry. So I would be looking to go long, top of the breaker block. Stop loss is a couple of points below the low. TP1 is going to be this swing high here. So I'll take 50% of the trade off of this. This is a high risk trade. Obviously we are counter trading here. The trend is lower, but I do have a bias to go higher due to the new week opening gap. Just thought I'd drop this quick snippet in here to show you the hourly close, because I did reference this before I took my entry. The candle did close just inside the 1 hour fair value gap. So this is the close of the fair value gap, this wick at this point, and you can see that we closed just inside. So my feeling was, given the confluences that we had for a long, even if this 1 hour fair value gap turned into an inversion fair value gap, we would at least get a retracement back to the 50% level before any potential continuation lower. So that would at least give me time to get to break even or risk free on my trade. So with the confluences stacking up and the potential to get risk free quite quickly, I was happy to take this entry. Let's go back into the main analysis now. So I'll take 50% of the trade off at this point here, so that will make me risk free. I won't need to adjust the stop loss, I can leave that running, and then I will close the trade at the top of the fair value gap. I'm not gone for the buy side because we may come up and not quite do that, so this may act as an inversion fair value gap. So we may come up, tap the top of it, and then reverse lower. So we may just trade within this fair value gap on the lower time frame. So I was going to take that at that level. Nice round 4 hour trade. I did record this entry live as it got tagged in, so we'll jump to that live recording now of the actual execution. And you can see we do have to weather a little bit of drawdown for around 10 to 15 minutes before the real move starts. But we'll jump to the live action now, and then we'll come back to the commentary in a second. So as you saw from that entry, we did get triggered in at exactly 4 AM. So the candle came down, tapped into the breaker block fair value gap. We did have to weather a little bit of drawdown here, so price consolidated, which isn't unusual. When you see a big drop like this, it's often the case that price will consolidate for 15-20 minutes or so before accelerating away. So we did eventually reject from 50% of this wick. So something that ICT teaches and something that I monitor is consequent encroachment of longer wicks. So here we split the wick up into premium discount. You can see that we're rejected essentially off the 50%, and then price accelerated very quickly through to take profit 1. Took 50% off at take profit 1, so this made the trade risk free, and then I was just leaving the rest to run to the top of the fair value gap. And we'll just scroll through now, so we can see price is doing its thing. Essentially it just runs very, very quickly through to the top, bagging a real nice 4R. The ultimate target for the day would be to run this up into the new week opening gap, to look for a closure of the new week opening gap. I just wanted to bag that 4R. I'm quite happy with that, so I've not left any runners on. I've just closed the trade in full so I can get away from the computer and go and enjoy my day. But we'll see, price does continue a little bit higher. We're back into the hourly order block as we get to live time now, as I'm recording this. So we may come up, we've made an effort to get to the new week opening gap. It may come up into New York session to fill that new week opening gap. But ultimately, that was the analysis for the 4-hour trade. So I hope you found that useful. If you did, please leave the video a thumbs up. If you've got any questions, leave them down in the comments section below and I'll do my best to answer them for you. And if you're enjoying the content, consider subscribing. I'm dropping videos like this every single day and it'd be great to have you on board. Thank you for watching and I'll see you again in the next video.